Good morning, traders. It's 8 a.m. Chicago time on the 12th of December, 2016. This is a Monday. Welcome to a brand new week. Hopefully, you had a very restful weekend. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm not going to go over the market news much, the overnight news much this morning. You can look for that yourself. There's been a lot of back and forth between the one China policy and Trump. And there's also a tweet about Lockheed Martin from Trump that's causing a little bit of turbulence there. Noise, really, not much substance there at the moment. Anyway, this week I'll go right into the calendar, and this week is pretty busy. This is the type of week I want to preface this real quick. This is the type of week where you want to keep your powder dry and have bullets to trade with. It's not a great week to go ahead and spill all of your limits early on. Today we don't have much. We have the monthly budget statement here in the U.S. Tomorrow we have the European employment figures and German CPI zoo wholesale inventories. U.S. we have let's see what do we have in the U.S. on Tuesday? Not much in the U.S. on Tuesday. We have import prices. However, on Wednesday, really busy day. We have retail sales, PPI. We've got cap utilization, industrial production, business inventories. We've got crude oil, and we have the FOMC at 2 p.m. Eastern. Wednesday is the big day this week. And then when we get into Thursday, we get to German manufacturing PMI, European manufacturing and services PMI, and then in the U.S. session on Thursday, we have CPI, current account, Empire Manufacturing, Philly Fed, and Manufacturing PMI prelim, as well as NAHB Housing Market Index tick flows in the afternoon. And then on Friday, we get trade balance in Europe, CPI in Europe year on year, the final figure, and then we have U.S. housing starts and building permits. So it's almost like a peak on Wednesday, a climb to the peak, which is Wednesday, and then a slide down into back to Earth on Friday there. So this is where your focus needs to be. That you need to be prepared between Tuesday, Wednesday, and Thursday. There's quite a bit on deck with Wednesday taking the big giving us the big number, the big FOMC announcement. Okay, the expectation for this FOMC announcement is quite high that rates are likely to be adjusted. So could be a really big day. Let's switch gears and go right into what we expected on Monday. Monday we were opening around 22.45 or so during the trader bite, and we were looking for sideways action, and then the market to test up and then fail back in and just go sideways into the close, which didn't quite happen. I mean, it somewhat happened. We didn't quite get to the prior day's point of control. But it was Hypo 2 that played out on Monday, a test down towards the point of control. The expectation is it would hold the point of control and the low volume node underneath it. The low volume node's right there. Oops. Right there. And then it would find buyers later in the session. And I advise you not to fade the closing move on Friday as it's likely to be strong, and that's what we got on Hypo 3. I was looking for buyers to step it up right from the get-go, to find sellers, and finally to rotate down. I'm going to spend a little bit of time with you on the weekly today, as there is something there to note. Here's what actually happened. I'll use the 15-minute to demonstrate. Remember, I'm using all March prices. I've rolled to March since Thursday, so if the prices don't match with your charts, it's probably because you're on December and I'm on March on the ES. By the way, for those of you who don't trade the ES, maybe you trade the NQ, crude oil, gold, DAX, Bund, Bobble shots, well, probably not shots, whatever, Euro stocks, whatever it is. The principles are the same. You're here for the principles, not for the actual plan. The principles of the auction are really the same whether we're, as long as it's a two-way auction. So I use the same approach to look at Apple, Google, whatever. So just because I'm talking about the ES does not mean it's really specialized to futures trading. The same principles apply to your product, whatever it is. Again, as long as it's liquid enough and it's two-way auction, you'll likely get the same behavior and you can create the same hypos. Um, whatever stock you're in, it just takes longer to get the homework done when you're monitoring 5 or 6 stocks or more on any given day. Using the market, the volume profiling and auction theory approach. So here's what we have for Monday or Friday. We opened at 43. We tested down to 42.50. We just got within 2 ticks of the prior day's close, about 4 ticks from the prior day's point of control on the push on the quick test down, but all of it has been was pushing higher, and then we got the flush up, the spike up on in the afternoon, and you could see into the close, it was quite strong, and so um, it's I'm not convinced, based on what I saw last night as I was doing homework, I'm not convinced that this is a sustained move up here. I know we're still holding these prices. We're still trading at 22.54 and a quarter, which is Friday's close, by the way. Friday's close is 22.54 and a quarter. That's the close of the week. And you can see it marked here, prior weekly close, and from there I project the range. But when we look at the profile and how it's behaved, so here's a chart of the weekly profile. So since this day here, the 31st of October, we reversed and we started one time framing up. What does that mean? We get higher lows or equal lows. That means one time framing is in effect. So on the weekly, on that time frame, and you can look at one time framing on a 30-minute, a daily, a weekly, an hourly, whatever. Whatever your time frame is, and you need to define that before you start trading. Otherwise, you're going to get confused by everybody that's talking about the market. If you don't understand their time frame, you don't understand what perspective they may hold and what their plan requires them to do to control risk and so on. So the first thing you got to define is what time frame am I looking at? What time frame am I trading? So we're one time framing up here unfailingly over the last 5 weeks, okay? But look at what happens here. We get the market stretching a little bit with the election week, consolidating, but still quite bullish, finishing near the high. The point of control shifting up. Notice point of control shifting up, point of control shifting up, point of control shifting up, but slowing down. And then last week, the point of control actually moved lower while the market moved higher. And this is where volume profiling and market profiling kicks butt. It shows you that price has moved higher, but value has not. This is a shot across the bow to anybody who's holding long positions heavy and has not scaled out. It's probably time to take something off. Okay? The market essentially is unable to shift value higher while prices went up. So the market continues to one time frame up, but the point of control, the most traded price by time or volume in this case, is lower. And so the market has moved away, has shifted away from value and is unable to bring value with it. So it is moving on thin air. This is much like the extreme of this, just a quick crash course in this. This is a very, very, very important point of using volume and market profiling. You will not see this in your, uh, you know, volume bar for the week or the volume bar per the day. You can only see this on a volume per price, and you can definitely not see it on a candlestick chart or a bar chart or a Renko or whatever. Um, you could see it in the profile. The fact is here is that um, what's going on is price is moving up on little volume. So imagine the extreme of this. Imagine that the market was trading at 2200 down here. Okay, it's trading at 2200. It's happy trading at 2200. Then all of a sudden, all of the offers disappear, and the best offer is at 2254, right up here. Okay, if the best offer, there's a one lot sitting at 2254 and nothing between 2254 and 2200. Just imagine this, just hypothetically, imagine that. And then somebody goes to buy. So they'll print one lot at 2254, which means your bar chart suddenly spikes up, straight up, and prints 2254 as the last print, and you get a nice big green bar, right? Uh, but actually, is that a valid print? Is that a valid trade? It is a valid trade because something actually traded there. It's not a data error, but it's not part of the auction. The reason it traded so high is because the offers are being pulled as opposed to bids pushing the offer and trading the offer aggressively and lifting the market, which is much more meaningful. And so if we take that extreme example and narrow it down to what's happening here, this is what we see here. We see the market lifting, but prices moving up as sellers are pulling back, as opposed to prices moving up because the market is aggressively bid, and it's a two-way fight. You need to have a two-way fight, buyers and sellers pushing back and forth to establish a proper auction. The market spiking up and coming back doesn't make for a substantial auction. Okay, it generally will roll over and start retesting the areas below. So this is last week's profile here. And the point I'm making is if you follow the point of control, the black line up, you can see that it has rolled over, but price continues higher. And it doesn't mean that this bull run is over. It just says, careful. This does not have a good structure. It doesn't have substance. It no longer has substance behind it. From 2206 above, it is a little bit light. Okay, so just be cautious there, and that's really the point I'm trying to make. Again, it doesn't mean you should sell short. It doesn't mean you should exit your whole position. It just means that there's something the market's indicating that the substance behind the move up isn't being supported by value, and that's a very important thing to have. This morning we're opening at 2253. The expectation this morning is again to move up towards the high, push up, and come back in. I'm looking for us to finish lower today than Friday. That's hypo 1. Hypo 2 is to have an open auction, look below, get back into this gap, hold, and then push back in and then start to move up again later in the session as the buying continues. Not expecting too much substance there. Hypo 3 is a push up into the void here. There's not much up there. I don't have measured moves or anything up till 2280, and then a rotation back down, and I'm looking for it to pull back down to about 2250 on hypo 3. Those are your those are my three key ideas, and my job now is to monitor how the market trades on the open and look for which one to lean against. If one of them is wrong, that's fine. That's great. I don't have an issue with that. I'm not looking for a guaranteed trade, which is something that kills people, is that they're constantly looking for a guaranteed trade. I'm not looking for a guaranteed trade, but if one of these hypos fails, it gives me a better opportunity at making money on the others that remain. Okay. The last thing I wanted to cover with you is tomorrow is at 4:30 Eastern, 4:30 New York time. I'm doing a webinar on executing trades or initiating trades using order flow. We'll go through some scalps. Um, if you have registered for this webinar, great. You're going to get an email today with a link for a trial for the order flow software that I have and a recording of the trade that occurred on election night. If I can find Brexit, I'll include that as well, and you can replay that recording and see how the market traded and how the order flow traded. And the reason I want you to do the trial, it's completely free, no credit card, whatever. You just run the software. It's a 10-day trial. The reason I want you to do that is because I want you to look at how order flow is in a market that is auctioning at extremes, and it's very, very useful. If you have not registered, just dig into the description of this YouTube stream, the YouTube video, and you'll find a link there. Go ahead and register, and as soon as you do, we'll shoot out a message this afternoon reminding you of the webinar and giving you the trial and links to the files, to the tick files to download to replay in the software so you can tinker with it before you come to the webinar. It helps you follow along much more closely if you've had a chance to play with the software a little bit. Anyway, I'll leave you with that. Good luck. If you cannot attend the webinar, register anyway so you can get a copy of the recording. Good luck, and I'll catch you tomorrow. Take care.